Hi, Ashwin. How are you?
I'm fine. How are you?
It's taken us a while to schedule this interview, and I'm happy that we are able to do it this evening.
We had a very busy 24 hours.
Okay, I'm going to hear all about that, I hope. Well, I've prepared a list of a few questions as a lead-in, and perhaps from these questions, you can take it as a platform to tell us more.
Definitely.
Okay, so let me start with my first question, yeah? So tell me, why did the Dow Jones climb above 33,000 for the first time ever last night?
Very exciting time. Last night, for the first time after playing around, Jerome Powell, the chairman of the US Federal Reserve, came clean. He said that they will not increase any interest rates until at least 2023. That was a big revelation. And the moment he said that, the US dollar dropped more than 50 pips and the stock market started going up. It's a very interesting time we are living in.
So, I mean, for me, I'd like to know, how can we make money from this new Fed dynamic?
I can't wait to tell you this. Tessie, we're living in very interesting times. For the first time ever in the history of the financial markets, we have a US Federal Reserve that is doing everything it can by printing $120 billion a month to keep these markets alive and afloat. This has never been done before, and this is an unprecedented Fed action. This is the reason why machine-only algorithms last year failed, because they only depend on past data. And if you depend on past data, you will definitely crash and lose money, because this has never been done before. And the Fed did this action, and those investors who understood this made a lot of money.
Interesting, amazing.
You see, investors who did not panic last year and who understood that the Fed is different from the stock market dynamics, they made more than 76%.
Wow.
If you would have panicked last year and cut loss and listened to the Doomsday people who said the market's going to crash and we have the Great Recession coming, you would have lost your pants. And a lot of people did lose their pants simply because they did not apply logic. What the Fed did has never been done before. And it fooled even all the software and the computer and the machines.
So how did you pick it up, or how did your algo pick it up?
Interesting question. Because number one, Jesse, our algorithm is not machine only. It is 75% artificial intelligence and 25% human brain. This is where it makes a big difference. Whenever I go for meetings, people always poo-poo us and say, oh, everybody's got an algo. Yeah, I know everybody's got an algo, but what kind of algo do you have? And secondly, what kind of accuracy does it deliver? Sorry?
So am I hearing you say that the 25% human input is your input, your personal input?
That is correct. I'm the Colonel Sanders of the whole plot. Let me explain to you how.
What do you put in?
Let me explain to you. When people say everybody's got an algo, and like I said, they don't understand, firstly, what kind of algo do you have? And secondly, what kind of accuracy does it deliver? When you put in the emotional intelligence of the human brain, the whole picture and the dynamic changes. On March 23rd last year, our algorithm started buying stocks simply because we felt that with the Fed action of this magnitude, the stock market had bottomed. And nobody believed us. But today we are laughing because every day, doomsday merchants say, oh, the market's going to crash. But let me tell you something, doomsday merchants, until today, the market is going to record high every few weeks. Where is the crash, I ask you? Talk is cheap, accuracy is priceless.
So is your accuracy repeatable? Is it bankable?
We are doing this since June 2017. And our accuracy ratio is 90%, okay, most of the time. We're not saying that we're 100% accurate. Nobody is. But as long as an investor understands the risk parameters and is able to accept 20% paper loss at any one time, and is able to wait 6 to 12 months, we can show you an ROI of at least 30% per year.
So
I
depending
won't use the word guarantee because I'll be put in prison. Nobody uses the word guarantee.
depending
in the management
on
business.
my risk appetite. So if I have a low risk appetite, my yield would be smaller.
That's correct.
And
If
what
you can
about-
wait only 3 months, your risk will be higher because you you'll have less opportunities because you can only wait 3 months. If you can wait 6 to 12 months, you will have a better window to make money because you can wait longer. If you can wait a longer time and accept at least 20% risk, you will have a higher chance of making money as opposed to accepting only, say, 5 to 10% risk.
But this is because
And when I say risk, I don't mean actual risk. I mean paper risk, because today's 5 to 10% paper loss can be tomorrow's 20% profit.
and
People have
this
to
is
understand
only
this.
in an up market because the stock market is flying. But what if you suffer a crash? What if it's a down market?
We are trained to make money regardless of market direction. The algorithm that we have does not bother with market direction, because even though the market is crashing, let me explain to you, there will always be companies and businesses that will make money in a down market. Let me explain to you a live example. Between 2017 June and today, Microsoft has climbed from $46 a share to $250 a share, regardless of the direction of the S&P 500. I always use Microsoft as an example because it shows you at the end of the day, when you're buying a top-class business, market direction does not matter. If you can handle the paper risk, Microsoft went up all the way. Market direction does not matter. If you had the guts to buy at 46 and keep Microsoft until $250 a share, regardless of where the market was going, you would have made a lot of money. But most people, number one, they have a scalper's attitude. They want to make money fast by just going in and out. That is totally wrong. You will never make the big money if you have the scalper's attitude.
So what happens? Hang on, just a moment.
Secondly, after the scalper's attitude, you have to also look at things like mega trends. I must tell you this, our algorithm only looks at mega trends. We are not scalpers.
So hang on, I have a question here. So for people who want to enter into a relationship with you, that is algo trader, so they come to you and they discuss a risk appetite and presumably a budget, and then you pipe them in to a program that is suitable for them?
Let me clarify. We have two aspects to our business, Tessie. One is algo trader, okay, for the retail client, where the retail client only pays us $3,000 for 6 months.
Okay.
And for that, the retail client gets algo-driven alerts on its WhatsApp, Signal, or Telegram, whichsoever he uses. Okay, that's our retail business. So with that retail business, it's our passion to show the people that you don't have to be a millionaire to become rich. There's this common fallacy to say that only the rich become richer. Yeah, but we can show you today that you can become rich, as in make money for as little as 50,000 US startup capital, and you can make about 10% a month. You don't have to be a filthy millionaire to make money. The second part of our business is the private client business, where we use the algo to customize the entire needs of a client together with the risk appetite. For that, you can make 30 to 50% ROI per year. Fund managers don't like to listen to this when we say this, because today, all the mutual funds and all the unit trusts in the world are giving you not even 10% a year. They don't like us, but I'm telling you this as the truth that we can deliver such results.
Slow down. So let me understand this in bite-sized snippets, right? So I've heard you say that there is the larger client with a bigger budget, and there is the smaller client with a smaller budget, or I should say a person like me, an everyday investor. And the caveat is that we need to follow your lead.
That's correct. You have to follow our leads because timing is very important in this market. Very important. If you miss a trade because you don't act in time, then you will miss the whole price trend.
So what I'm saying is, if we don't take your lead, so we wouldn't know the market like you know it, and we might make the commonest mistakes, you know?
Well, some people are busy. They don't know how to execute in time. This is where we have an additional service to execute the order for them. We can execute the order for you at a service fee.
Right, right. So it's important that you set it up early in the conversation, who you are talking to and how the relationship will go.
That's
and
correct.
Whether they use the platform that you suggest is up to them. For instance, would I use the same platform as a multi-million-dollar institute or an individual, a high net worth individual? Would that be the same?
The ideas and the strategies are the same. It's just that the capital deployed will be lesser and the risk ratio will be a bit higher for the retail investor. But having said that, it all depends on what kind of affordability the client can have.
Okay.
We can create a strategy based on the affordability of the client. If you're a $3,000 client for 6 months, retail client, we can tell you what to do to make money with that kind of capital. And if you're a $5 million client, we can structure a whole new framework for you to tell you how you can make big money using what you have. So it's all adjustable. There's nothing engraved in stone.
Did I hear you say your fees $3,000 for 6 months?
That's correct. That's the subscription fee for our service.
Okay, and that will buy you what exactly?
$500 a month, $3,000 for 6 months will give you 24/7, Monday to Friday, trade alerts on your WhatsApp, Signal, or Telegram on ETFs, equities, FX, options, futures.
And I need to follow your alerts, and I go to my own bank and execute those trades according to your alerts.
Exactly. You can go to your own bank, your own broker, your own online broker, and execute those trades. And if you have no time to do that, for a small fee, we can execute the trades for you, so that you don't miss out.
So that will be very helpful.
Yes.
Yeah, because none of us, or maybe not many of us, would have that kind of time to be alert by your alerts.
That's correct.
Yeah, yeah. So just veering off a little bit, what about the S&P 500 index? Where do you see it going?
Well, this is a message, a stern message to all people, the doomsday merchants who have been predicting a market crash since March 2020. We see the S&P 500 going to 4,200 by December 2021 or February 2022.
That's astounding.
Yeah. So if you listen to us right now and take us on this offer, we will prove it to you that good money can be made. And another thing, Jesse, before I end off, I want to let all investors know we are living in exciting times. This is no more the old economy only. We now have the new economy that has been sharpened by the pandemic. In the investment landscape, besides the new old economy, we have the new economy which does things like DNA sequencing, artificial intelligence, robotics, lithium mining, electric vehicles, genome sequencing. These are exciting fields from which big money can be made. When I use the word big money, let me finish. When I use the word big money, I'm talking about 30% per trade, which the old economy cannot deliver so much.
I've never heard anyone make such amazing claims. Can you actually support your claims?
Right. We can support our claims, but unfortunately, we do not give investors a free trial. We do not. Because once we start giving you alerts, you will know so much. It's not fair to us to give you a free trial and then you get a freebie with so much, and we only, our price of $500 US a month is the least that we can give you. We are not making millions from this. We are not.
We are doing this as a track record.
We're doing this as a service to the society to show people that a normal person with 50,000 US or even 30,000 US can make money.
That's
our
amazing.
service to society.
But surely you have a track record. There's
We have a
something
track record, yes.
to fall back on. I know that the past isn't a very good gauge for the future, but it is a gauge nonetheless. So perhaps
it is, but you see, like every fund manager will tell you, past performance does not guarantee future performance. We prefer clients to see for themselves how we are doing every single day, because we have trades coming out every single day. And like I said, we are not 100% accurate. There will be volatility. There will be risks, 10% risks, 10% overshoot margin, we call it. But it's up to you to plan the risk. If you can afford a 20% paper risk, okay, until the market goes your favor, if something goes wrong, then we can constantly make money for you. But if you say, I can't afford a single iota of risk, I'm sorry, we cannot help you, because there is no such thing in this entire market. There's no such thing as a risk-free trade.
So just now, earlier in the conversation, I heard you mention something that symbolizes a hedge program of sorts.
Yes.
Did I hear correctly? Like, say, when it's down markets, there is a strategy to use?
Yes. Let me tell investors how they can do that. When the stock market goes up, the dollar drops. And when the stock market goes down, the dollar goes up. This is how we plan our hedge. When we are long stocks, we are always long dollars, because the moment the stock market drops and you start making a paper loss on your positions, it'll be balanced, because your dollar rise will bring you new sources of income and balance your stock market loss.
So I'm really hoping that people who start a relationship with you would have sufficient hand-holding so that, you see them through this journey. It's a rather exciting one, but, not everyone can say that they are an experienced investor. How much hand-holding would you be giving?
For the 3,000 plan for 6 months, there is not much hand-holding, because you have to execute the orders yourself with your banker or your broker or your online broker. But like I said, if you want us to hold your hand for that, we charge a small fee. For the 5 million program, we hold your hand all the way, every step of the way, because we are creating a portfolio from scratch for you, based on your requirements, based on your risk appetite, based on what you want out of your money.
Is there any way that an investor would be investing without being affected by the volatility and noise?
Volatility is the name of the game. There's no such thing as I want to be protected from volatility. You can be protected from volatility, but you cannot say, I do not want volatility. If you want to invest, volatility comes together with it. So you can't say, I want to invest in the market only when it's not volatile. No such thing. But
so you have a plan for the
we will cushion you from the volatility as much as possible, and we will try to make money for you from the volatility. That is the most important thing. We don't just sit down there and say, oh, market's dropping, we're losing money. We don't do that.
So
we make money from volatility.
From this entire conversation, I'm hearing that the message you want to come across is that we need to form a tight partnership with you, to stay close to you, because in up and down markets, you have different strategies.
Yes, and because the strategies change all the time. Exactly.
And although you give out these alerts, there are other value-added services that are pegged on there, so that if we wanted to engage you deeper, we could do so.
That's correct. That's correct. It's not just one size fits all. But it's what can you afford?
If they are already sophisticated investors out there, then they could just glean the information of you and depend on your accuracy.
That's correct.
So in the entering of this arrangement or relationship with you, what are the steps?
All you have to do is contact us at bit.ly/algotrader or bit.ly/algofactory, and we will start talking to you and understanding your needs and what you require.
So you talk to every single subscriber then?
Yes, whether it's a private client or retail subscriber, my staff sends me all the messages because I want to know what kind of people we're receiving and what kind of people we're entertaining and how we can fulfill their needs. We are very personalized.
So it's been a rather interesting conversation, a bit challenging to my mind because of amazing things happening in the stock market. Do you have a parting message for the audience?
My passing message to every investor out there is this: when the market goes against you, please do not panic, because volatility is actually your friend. We have seen in the last 3 years since we introduced the algo, volatility creates the greatest wealth. If you fear volatility, you will not make big money. Do not fear volatility. Understand your risk appetite. Be honest with yourself as to how much risk you can afford. And then you take on volatility by the horns. And you will make big money because you have been honest with yourself as to how much paper risk or actual risk you can afford. Once you are clear to yourself, volatility is your friend, it's not your enemy. Look at last year, March the 23rd, last year. The market dropped 35%. Everybody panicked. But now they realize after 12 months that that was the best time to buy stocks. But at that time, people lost their logic and head and said, oh, sell everything that you got. All the banks are jumping and telling the clients, sell every piece of stock.
Because there were margin calls.
That is wrong. That is wrong.
But there was a time of
banks. I'm here to confront banks to say, you guys don't know what you're talking about. You wear your suits and you sit in your offices and you talk big. But who saw this market climbing 76% in 1 year? Who?
But I myself had received margin calls, and the equities that I invested in were rated.
I'm sorry to say this, Cassie.
Zero value.
Yeah,
and
the reason people get risky margin calls, I'm sorry to say this, is because they do not plan their risk. They do not plan their risk as to how much they can afford to be down. You have to be honest with yourself. If you tell yourself, I can afford 30% risk in a virus like this, okay? Then you plan it. But there's no point losing your head, because now 1 year later, people realize, if only I had not panicked, if only, it is too late. So let me tell you something now. Let me tell you something now. Right now, if the market drops 10% from here due to higher bond yields, because that ghost has not gone away yet. Right now, 10-year bond yields are at 1.70%. So it will cause a disturbance to the market. But let me advise you, if the market drops 10% now, please do not panic, because it's an opportunity to buy.
So you see a further rise.
Yes, we are seeing the S&P going to 4,002. Right now is at 3,900 plus.
Wow, that's a huge piece of potential.
Yes. Now, if the S&P drops to 3,007, I tell all investors, please do not panic.
Well, I'm so glad that we had this conversation. I just wanted to share with the audience my experience with you, because when the banks were calling me, those margin calls and those rating of my equities at very low values, I'm so grateful that I had an expert like you. However, it's for us to make contact with you. Otherwise, I speaking for myself, I would have remained in the dark, very worried, very anxious. So I'm glad you were there to allay my fears and move my positions up.
I have one final message for everyone who doubts the algorithm. Let me tell you this. From a competitive point of view, a normal commercial bank, a normal private bank does not have an algorithm. They don't believe in algorithms. They have huge research departments. And let me tell you, this is not a boast, but I can take on the research department of any bank anytime. Because we know our success is due to knowing the flows. The secret recipe and source of our algo is to understand what is happening in the market, who of significance is buying and selling and doing what, whether it's FX, whether it's equities, whether it's ETFs. Once you know what the big boys are doing, you have a very high chance of making money. And this is what the banks, even if they know, they don't tell you.
So that's what they
And
say.
let me give our viewers a free tip.
Oh.
Okay.
Mm.
2 months ago, our algo started looking at a stock called QuantumScape. And QuantumScape was very low. It's like $40 a share. And nobody knew about it. Okay. So the algo said to buy the stock. We started buying at $40 a share at that time, 2 months ago. QuantumScape went up to $85 a share.
Wow.
When it was announced that George Soros, Morgan Stanley, and Bill Gates were the top shareholders. And imagine, we spotted this opportunity before the big boys came on board. I leave that with you. I leave that thought with you.
Thank you so much. And that's what you mean by go with the flow.
Yes.
Okay. So again, how to contact you?
Please contact us at bit.ly/algotrader or bit.ly/algofactory. The Algo Trader address is linked to WhatsApp, and the Algo Factory address is linked to Signal. Sorry, a Telegram.
So, ladies and gentlemen, I was just speaking with Ashwin Binwani. He's a wealth strategist, and his company is Peak Prosperity Consulting, and he does all asset classes across global markets. Thank you so much for speaking with us, Ashwin. Speak again soon. Thank you so much.
Thank you.